I know we've covered probably a dozen different topics. Let me ask each of you to take a few seconds and just talk about what the key takeaway is. Sarah, let me start with you.
Key takeaway, don't neglect your depreciation planning. You can't assume that your assets qualify for bonus depreciation. You need to analyze your contracts, take a look at your transactions to understand whether or not your used property and self-constructed property qualifies for bonus depreciation. That way you can know whether or not you should claim bonus depreciation or whether or not you need an election out statement if you're managing your taxable income for some of these other attributes that we've been talking about. And also, alternative depreciation system, you've got to look at your ADS depreciation for GILTI. You're going to have to look at it for domestic purposes. We didn't talk about it in this webcast, but for the FDII also. So,
Jason.
Yep. In light of tax reform, there's just a renewed focus of tax accounting and accounting methods. Not only are there really significant changes to what we view as, wholesale federal provisions such as bonus depreciation, Section 451, but accounting methods have relevancy for a lot of the foreign provisions that didn't exist prior to tax reform, and there's just a lot more reason to bring accounting methods into projects.
And Kate?
Just to be mindful of your book method changes that you have for 606 purposes and comparing those to your tax methods to determine whether method changes are needed to comply with the new 451 rules, and to be on the lookout for the regulations under 451 that hopefully will be released soon. Those hopefully will answer a lot of unanswered questions and provide welcome guidance to taxpayers. So just to be on the lookout.
Thank you, guys. Excellent intel. I know we'll be having some webcasts coming up as soon as we get 451 regs, bonus depreciation regs, and whatever else comes up in our area in the near term.